next speaker is involved. So Nick Blitterswyk uh, has been involved in solar project development around the world, but his most notable project is probably the one he did for the Philadelphia Eagles. So he's a commercial solar project developer. This company also is publicly traded. It's on the Toronto Venture Exchange and has been on a tear this year. So it's up 10x, but it's still a relatively small company by the standards of public companies. The change in the business appears to be that they decided to focus on commercial and community solar development, mainly in the US, despite all of Nick's international experience. So he is where, as somebody who's had a lot of experience around the world and around the US, he sees where policy and capital flows can be brought together. He's also an innovator in green bonds and can tell us how people are making money or how he's making money in solar. Nick?
Yeah, thank you very much for that introduction, Tom, and thanks, Peter, for having us on. So my update is on the commercial and community solar sector, as Tom just said, and with a particular focus around this region in the Northeast US, which is where we've really been busiest as late. So as Tom said, UG is a commercial community solar project developer. We're based here in New York City and operating primarily throughout the Northeast, although we do some overseas work as well. So while preparing for this conference, I went back to my notes from last year's Wall Street Green Summit, where I gave a presentation on the same overarching subject. So there were three main points that I focused on in that talk. First, that it was still very early in the growth of the commercial solar sector, with market penetration somewhere in the US in the 1% range, but that the economics had become increasingly compelling, passing grid parity only in the few years prior, which was really leading to greater adoption in the commercial solar space. Second was that typical challenges of commercial solar were gradually being removed in terms of financing and the economics, of course, and so on. And community solar was playing a big role in that, but it was still early 18 months ago. And third, that there were several places to put money to work in the sector with a breakdown of what those opportunities look like. So now, 18 months later, there's kind of three main points I wanted to touch on in this year's update. So first, discussion around community solar. So in that time frame, it's become a very significant driver of growth in the commercial solar space. Second, the project funding environment, including the impact of COVID-19 this year on the availability of tax equity. And then third, looking forward a bit to 2021, which of course is now just around the corner, and where we see things evolving going forward as well. So on the first of these three, when I think about the commercial solar market overall, it was only a few years ago where your typical rooftop power purchase agreement dominated, with the building playing both the role of the host of the system and then the off-taker of the electricity produced through the long-term PPA as well. What we're finding, and has been a big, huge driver of our growth this year, as Tom touched on, is that in New York and New York City in particular, but also in other markets, that model of the PPA has really been eclipsed by the community solar model. So in contrast to the PPA market, the vast majority of projects being developed and built in this mid-scale space right now are being done so as community solar projects. So in essence, rooftops, parking lots, plots of land being leased to make way for community solar systems, with the electricity from the systems sold to other energy consumers who benefit through a discount on the credits purchased through that arrangement versus the grid rates. So we are seeing this model take off in other markets as well, not just in New York. Maine is another state where we are very actively developing community solar systems. Just in the last day or two, New Jersey announced that they've doubled their total available size for year 2 of its pilot program up to 150 megawatts as well. So as we see it, the primary reason for the success of community solar in accelerating the growth of the mid-scale solar sector is the separation of building owner and energy user. Well over 90% of commercial buildings are owned by a different party than the tenant. So offering the building owner a way to benefit through a lease payment, as opposed to being required to purchase the energy themselves, expands the addressable market quite drastically. And at the same time, it offers those who can't install solar themselves, like, for example, companies in office buildings, people who live in apartment buildings, and so on. It offers them a way to consume solar energy and to save money as well. So in addition, many incentives around community solar are targeted towards lower and middle income communities, targeting targeting them with more of the benefits of cleaner and more affordable energy to the communities that need it most. So, point two, just in terms of project funding, of course, 2020 has been an upside down year in many ways. Generally speaking, we're finding strong demand from money looking to invest in this space in all areas, but with the potential exception of tax equity. And tax equity really is the story here. So in the kind of COVID-19 pandemic year here, it somewhat limited the amount of tax equity available. Well, at the same time, actual demand for tax equity has been higher than many expected as project deployment has continued at a good clip. What we are seeing is that in many cases, institutional tax equity that was already committed has remained in place. But on the smaller end of the scale, the smaller funds and brokers and what have you are having a harder time lining up tax equity this year, which has constrained its availability in the commercial space for 2020. And we expect that this will be alleviated for 2021. But something that would greatly help in alleviating this constraint is for a cash grant option to the ITC, which has been on the table at times throughout the year. And at times we've been somewhat hopeful that it would get passed. With the election less than 1 month away now, at this point, we don't expect it for 2020, but we are hoping that it would be included in stimulus measures after the election, regardless of the winner, along with an ITC extension. A cash grant would be a significant win for the commercial solar space in alleviating what remains one of its biggest constraints to faster growth. Lastly, I had promised to give a sense of what we are seeing going forward. So first, generally speaking, we see an increasing adoption of community solar along with other virtual net metering arrangements, which will continue to expand the addressable market. There's a tremendous amount of development and interconnection activity in the pipeline, so we're really excited for what that means for our sector. I believe this is true not just for the handful of states that currently have some form of community solar market, but also true for many states currently in a pilot phase or are considering such measures. We're also watching the federal regulatory environment closely, and of course the election will play a role here. The investment tax credit, which I touched on, has been an incredibly effective tool in the growth of the solar sector at large, but is currently being phased down. While I believe our sector would continue to grow in the current environment, seeing the ITC revert to 30% on a long-term basis would be a very effective way to ensure that this market continues to grow more rapidly. And along with that, a cash grant version of the tax credit would be a very, very effective way of expanding the mid-scale market, which has a more difficult time generally accessing that federal incentive. So with that, back to you, Tom.
Great, Nick. What we understand is that the ITC had to be invented by lawyers who got paid to deal with complex structures, because it's a pretty inefficient way to expect developers like you to sort of wade into tax equity markets as a third leg to a stool. You have enough work to deal with the landowners and the debt financing sources and the equity. Tax equity is a very inefficient way, and I've often felt a lot of the benefits leak out to corporations with lots of profits who can use the tax credits as opposed to going to directly support the project. So only lawyers involved in, and they're also involved in drafting the legislation. Think about it. So Nick, one of the questions from investors is, does your stock price sort of fully reflect your pipeline value, or is it still a good chance to buy and see appreciation despite your surge this year?
Yeah, well, I mean, I guess I'd first focus on the surge, as you called it there, right? Like, we've had a lot of success lining up additional projects this year, even in the face, of course, of the COVID-19 pandemic. And so from that perspective, we have over 60 megawatts of projects right now that we're developing towards deployment and through the deployment phase for those projects, and a very large pipeline, of course, behind that we're developing as well. So, although it didn't necessarily come here to hype the stock necessarily, I guess what I would say is that, like, from a value perspective, that the value of those projects is well over 100 million in terms of project net present value,
Mhm.
and the market cap's still only about 25 million. So, from that perspective, I think it's still quite early in UGE's growth story.
So you're finding the public market is receptive to development companies? Because historically they would prefer people who owned the assets and produced a steady, predictable income like a yield co, as opposed to a developer that has to deal with the market conditions to get
I,
projects.
I think that's actually a really good question, Tom. So, a big part of UGE's kind of renaissance, if you will, this year, surge, has been a pivot towards owning and operating our own assets. So UGE as a developer and builder of those projects, we used to primarily flip those projects to other companies. And getting close to a year ago now, we decided to start financing those projects ourselves to own and operate. And I think that's actually resonated really well with investors, for the reasons that you just touched on. The other thing I would say is that, well, two things. Broadly speaking, I think that there's a surge in general interest towards what people often, of course, refer now to ESG. But people are starting to realize in the broader market that solar is incredibly effective. Economically, it's very competitive, and same with other technologies as well. Of course, I've been hearing other people on the panel here talk about offshore wind and so on as well. So there's that broad interest, but then within the capital markets, there's been the asset owners, there's been the residential solar companies, but there really hasn't been any company that's focused on this commercial and mid-scale space. And I think partly that's based on the fact that it's a little bit earlier on, but growing very quickly. And so, we hope to provide investors with that opportunity, those that would be interested in investing in this commercial space. And I said three. One other small point I'll say is that, I think in this commercial space, asset owners have a bit of a difficult time, actually, I think, building up the portfolio of operating projects, given that they're not the developers themselves. And I think that that's a real strength of ours in terms of being the developer who's then bringing those projects all the way through into operation. We're kind of sole sourcing our own projects in that line.
Okay, well, it apparently there's billions, maybe $1 trillion looking for green investments, and you provide one place for them to go. So that's great. Uh, you haven't mentioned anything about battery storage. Are you doing that now, or will you expect to do storage as part of your projects in the future?
Yeah, no, another really good question. So we have a portfolio of projects here in New York City that includes battery storage. I know we announced, I think it was sometime over the summer, that we received permits on the first three of those sites. And so from that perspective, we have some battery storage. What we're seeing is that the economics are, in our markets, kind of finally getting to a point where they make sense. And so I would say 2020 is the first year where, when we're developing solar projects, virtually everyone in a market like New York, at least, we're analyzing the possibility of including storage in that as well. There's still some permitting considerations and things like that that can slow things down, but those barriers are getting knocked down over time as well.
All right, well, we need to wrap up here, but just remind us what the ticker symbol is again.
Yeah, no, thanks, Tom. So it's UGE up in Canada and UGEIF down in the US.
All right, and just so we don't get a misconception, you're an American company, right? Or U.S. company, I should say.
So we're actually dual headquartered in New York and Toronto. So like the prior guest, Don, I'm Canadian, although I started the company down in New York. So we trade in both countries, but primarily our backlog right now is here in the US.
Well, we look forward to tracking your progress. Thank you for coming today.